Hi everyone, my name is Ryan Jones, and today I'm going to be demonstrating the power of quantum charts by showing you how to conduct some intermarket analysis and create an intermarket analysis system. And what I mean by that, intermarket analysis, I mean you can look at the information or market movement from one market and trade a completely different market. Or you can look at market information from both markets and trade one of the markets. Today I'm going to be looking at the S&P and Google, but this can be applied to anything. There's been a lot of studies in the past on intermarket analysis, correlations between certain markets, non-correlations. For example, does the price of bonds affect the price of the S&P? Is there a correlation there? What about gold and S&P? What about gold and bonds? What about the S&P and Google? What about crude oil and crude oil stocks? You can see that there might be some correlations there that can offer some trading opportunities. So what I'm going to do is I'm going to show you the power of this ability that you now have. Before this program, you either had to know how to program or you had to hire a programmer in order to have any of this kind of information available to you. And now, within seconds, you can literally produce some intermarket analysis and start to look for opportunities using this kind of strategy. Now, before I get into this, if this is your first Quantum Charts video to watch, understand I'm not going to spend a lot of time on certain aspects of the program. I've already created other videos. You're going to see what this can do. You're going to catch on pretty quick if this is your first time to watch this. You're going to catch on real quick, but I'm not going to spend a lot of time on stuff like the market movement analysis, which you're going to see, the system report, statistics, which you're going to see, etc., etc. So bear with me on that one, but we're going to run through this real quick, and this is just going to blow your mind. So as you can see, I have an S&P chart open, and I've created a new system which is called the S&P Google 1.4. I have an S&P Google long 1.4 strategy. So there's going to be a buy. If I wanted to, I could add a sell. But here's the buy, here's the exit. I obviously know what I'm going to do here. But regardless, I start off by clicking on a bar. And immediately the conditions with regard to this bar populate the box, the condition box, and you can see that there's a reference here, and it's to the market and the time frame. And every condition is referenced to where it came from, market and time frame. And what I'm going to do is I'm going to take one of these conditions. For example, I'm going to take the close is less than the previous low, and I'm going to drag and drop it into this box. It's going to reference this market and time frame, and then I'm going to come up here and I'm going to open a Google chart, and I'm going to look for some sort of divergence. So this particular condition says that it closes less than the previous low in the S&P. Well, what I'm going to want to happen is I'm going to want Google to move higher. And in this particular situation, I can either say Google is greater than the previous high, or I can be a little more complex and say closes greater than the previous close for the previous 3 bars. So 3 consecutive bars. I'm going to use that one. I'm going to drag that into it. So now I have a situation where I am looking at either the S&P or the Google markets based on these conditions. Now if I push play right here, Google is open, so it's going to show me every bar where Google, where this occurred in Google. Okay, and it's going to tell me what happened in Google after these conditions occurred. Or I can click on the S&P, and it's going to then reference the Google and the S&P and show me what happened in the S&P after these 2 conditions occurred. Okay, so I'm just going to click on the run button, if you will. I can click on my report, and I can see that it occurred 16 times with the market closing higher the following bar, and 8 times with the market closing lower the following bar. Okay, this is the market movement stats. This is every single bar after the occurrence and referencing what happened to the market based on the occurrence bar in relation to the occurrence bar. So 67% of the time, and in this situation, 1 day later, the market closed higher. The S&P market closed higher when it closed less than the previous low, and the close in Google was greater than the previous close for 3 consecutive bars. When those two things occurred at the same time, then 67% of the time the market closed higher in the S&P the following day by an average of almost 10 points. It closed lower 33% of the time by an average of about 7 3/4, or excuse me, a third of point, 7.36 points. Okay, so we have probability is higher and the size of move is higher. So not a bad situation here. And again, this is referencing both S&P and Google. Okay, so I look at this and I say, okay, you know what? When that happens, that looks pretty decent. So what I'm going to do is I'm going to create a system, which I've already done, obviously, by just simply clicking on this new strategy button. But here's my exit, and the default is at market, and I'm going to delete that. And what I can do here is, if I wanted to, I could require certain conditions to exit this as well. For example, my entries are using S&P and Google, and it's based on a divergence between the two. For my exit, I could say, hey, when bonds close higher than the previous 3 closes, then exit. So I can open a bond chart, I can drag the condition into that, and then exit based on that condition. So it's just crazy what you can do with this particular situation. But for simplicity purposes, on this first video where I'm showing the intermarket analysis, I'm not going to do any special condition there. I'm just going to say click on the exit, and I'm going to say close of the entry bar, and I'm going to drag it into my signal box. Okay, now what I've done is I've just created an entry strategy and an exit strategy, and in this particular system they're combined. So this system is actually showing over here in my solutions box. I'm going to open the system. Okay, so now I have a system here. It combines both the entry and the exit, and it also combines whatever markets it was using. So if I wanted to trade both the S&P and Google with this particular situation, I'd leave it alone. I don't. I only want to trade S&P, so I'm going to go to the Google. It shows what it's a drop-down box. I can add a market, or I can take away a market. I can add any market into my portfolio. If I wanted to trade Google and the S&P and gold and whatever else, this particular system, I can just add those in here and it's going to trade it. I just want to trade the S&P, so I'm going to click on Google and remove the market. Okay, so now it's only trading the S&P. So when I push play over here and it gives me a list of trades, that list of trades is only taken in the S&P. Now it is still referencing the Google market action in order to generate the trades, mind you, but it gives you a list of trades based on my entry and exit conditions. It gives me a report, a general summary, total net profit of $9,800, the largest drawdown being $3,400, total trades 22, winners 13, etc., etc. It gives you a little bit more of a drawdown. Largest drawdown, average drawdown, second largest drawdown, third largest drawdown. So it gives you a really complete feel for how this particular situation traded. Again, I'm not going to go over each of these statistics. I just wanted to simply show you the power of this program when it comes to intermarket analysis and the number of opportunities, the number of possibilities here are absolutely endless. And guess what? You don't have to know a single word of programming to be able to test out just incredible ideas. I can get more complex in this in this situation, obviously, I can add a new strategy group so that I'm referencing now more than one bar, conditions for more than one bar. We've gone through that previously. You can do the same thing. I can create this to where it's not referencing the time frame or the market, and it's only referencing whatever market I apply it to. Simply by clicking on this button, I can do the market override, is what I call it, so that it's not referencing these two markets. It's only referencing these two conditions from the same market. Obviously, there would be no trades in this particular situation if I were to do a market override and say don't reference the S&P or the Google, but just these conditions to whatever market I apply it to. And there wouldn't be any trades, because you can't have a close is less than the previous low and a close is greater than the previous close on the same bar. So you can see how this referencing is very, very powerful. It is absolutely powerful. And there's going to be more videos, more complex situations that I'll show in coming weeks. But for now, that's all I wanted to do, is just to introduce you to the power of this program by demonstrating intermarket analysis and system creation.